As promised, investors, I'm going to be sharing my 4 largest positions in my 6-figure stock portfolio. I went over positions 10 to 5 just last week, and today we're going to get 4 through 1. Now I'm making this video series to show that my portfolio, it's more than just dividend stocks. Investors, if you want to grow your wealth, growth stocks need to be part of that puzzle, especially for the younger investors. Those J&J dividends, they're only going to get you so far. Luckily, all 4 of the stocks I'm going over today, they pay dividends, so it's the best of both worlds. Stock number 4, Microsoft. It's my 4th largest position with over $3,800 in equity, and I own 15 shares. I've been buying Microsoft since March of 2018. Being a long-term investor has really paid off, as some of my initial shares are now up over 180%. Microsoft, of course, is the tech giant specializing in software and services. They make money from their cloud solutions, Windows operating system, Microsoft Office, Bing. Okay, they probably aren't making too much money with Bing, but Microsoft dominates in other areas, as they just made over $200 billion in revenue this past year. And thank God, Billy Gates and his creepy family are no longer running the business. Microsoft has a $2 billion market cap, making it the 3rd largest company in the world. Microsoft segments just continue to go up because the company is concentrated in areas that are in high demand, such as gaming with the Xbox consoles, or the Azure cloud segment continuing to experience 25% compound annual increases. Microsoft receives a buy rating for the majority of analysts, and a consensus price target of $334 is about 25% upside from today's prices. Microsoft is also a dividend payer, just under 1% yield right now, but their company has raised their dividend for 20 straight years as they come closer to being a dividend aristocrat. My 3rd largest position is Nvidia, a company that specializes in semiconductors, graphics processing units, data centers, and is a big player in gaming. Nvidia has taken quite a tumble, so let's see why I'm still bullish on this company. Nvidia is huge for crypto mining, as their chips are what powers that validation to actually work. But crypto, it just has not been doing so hot lately, so the demand has started to go down. I expect this boom and bust cycle to continue for years. Luckily, Nvidia has other segments like AI, artificial intelligence, which is used in self-driving cars. Imagine if we do one day go totally autonomous. Imagine how many chips of Nvidia's and licensing fees that this company could be charging. Nvidia's gaming segment and GPUs, they were actually down in their latest earnings call. The company blamed this on geopolitical issues in Europe and inflation, as people will probably prioritize buying eggs at the store versus the latest copy of Gran Turismo 7. Nvidia's data center segment continues to dominate, going up 61% year over year. This continues to be a growing and profitable business segment, and it's so advanced that it enables machine learning. It analyzes big data and adds insights to customers. Buying into this company is really buying into the future. I'm betting on my investment in Nvidia to one day pay off big, because artificial intelligence is estimated to be a $13 trillion global industry by 2030. Expect Nvidia's technology to power a portion of that, whether it be self-driving cars, language processing, cloud computing, or their deep learning recommendation systems. Some recent news that came to light is that the US will now require a license for any of the companies in which artificial intelligence chips are exported to either China or Russia. Now, this caused Nvidia to tank, being down as much as 10% in one day. Nvidia announced that they will now be short about $400 million in potential sales to China because of this new requirement. They said they won't be hurt in Russia because they don't sell products to customers there anyway. Now, I understand the reason for the sell-off when Nvidia just came up $1 billion short in their latest earnings report. But at the end of the day, $400 million, that's just going to be a drop in the bucket for a long-term investor like me who is looking at the long-term horizon for this company. A good investor knows that this is a great buying opportunity. Just don't tell the greatest investor of all time this, and that would be the dynamic duo of Nancy and her husband Paul Pelosi, who suspiciously sold over 25,000 shares of Nvidia on July 26th. The stock is down 17% since then. It's almost if Nancy somehow knew the US government would impose this requirement and cause the stock to plummet. The Speaker of the House's salary is $223,500, but Nancy is estimated to be worth about $135 million. 2 words on how she built her fortune. Insider trading. Now, I said all these companies pay a dividend. A dividend's a dividend no matter how small. Nvidia's is a whole 16 cents a year. I currently own about 33 shares of Nvidia worth $4,500 in equity, making up 4.5% of my portfolio. My second largest position is not an actual company, but an ETF in the triple Qs. This is an amazing investment tool for investors of any age. Tech stocks have dominated in total stock market returns since the 21st century started. Buying a low-cost ETF such as the triple Qs is really holding a basket of stocks that are among the 100 largest on the NASDAQ, the largest being Apple, Microsoft, Nvidia. Do any of these sound familiar? Owning this fund also means you'll be owning Adobe, Texas Instruments, Qualcomm, along with so many other great tech stocks. No need to listen to any earnings calls or worry about when a stock goes down 10% all of a sudden. But on the flip side, know that if a stock does really well, it might not really show in the share price of the triple Qs because there's going to be 99 other stocks influencing the triple Q's price. QQQ is the second most traded ETF on a daily basis based on its trading volume, and it's not hard to understand why. A $10,000 investment since the start of 2012 would have grown into $57,000 today. That's an average return of about 18%. Triple Q even pays a small dividend of about 60 basis points. Just another reason to love QQQ. I currently own 20.29 shares of QQQ worth about $6,000, making up nearly 6% of my portfolio. Unfortunately, I only started buying the triple Qs toward the end of 2020, right at the end of the last great bull market. So my returns haven't been the greatest, but I'm almost certain the big tech stocks will be bigger 10 years from now than they are today. So I don't mind playing the long game to get rich. And my largest position should surprise nobody. Bed Bath & Beyond. Yes, here is a picture of Bed Bath & Beyond taken on an iPhone product created by the company Apple. Apple is the largest company in the world at a $2.5 trillion market cap. Apple just overtook Android devices to now have over 50% of market share of all smartphones in the US, something it hasn't had since the iPhone first came out in 2007. If I find out the girl I've been talking to is an Android user, I usually don't text them back. iPhone sales make up about 55% of Apple's mind-boggling $400 billion in annual revenue. But they also make plenty of money in MacBook sales, iPads, other hardware, and of course their services segment, which is the fastest growing segment and tends to have higher margins. This includes the iCloud storage for the endless selfies we take, Apple Music, the App Store, and Apple Pay. Apple has a very cult-like following. People are always lining up to buy their new products, and once you get into Apple's ecosystem, chances are you will be using other Apple products. Apple has plenty of tricks up their arsenal, with heavy rumors of an electric car being in the works, as well as their new augmented reality, not realty, and virtual reality, not realty hardware. Apple is known for its amazing balance sheet, but just how good is their balance sheet? Well, the company that is Apple at times has had more money on its books than the US Treasury. Currently holding $179 billion in cash on hand. Imagine how many acquisitions and research and development they can continue to do to grow their portfolio. All of this is exactly why I love my 40.11 shares of Apple, worth over $6,200 in equity, making up 6.17% of my portfolio. It's been a great investment for me over the years, returning a total of 110% or $3,300 in gains. So I made these two largest reveal videos to show while I do love dividend stocks, growth is still the primary focus of this portfolio. If you like these type of videos, I need you to touch that like button and let me know in the comments. Otherwise, I don't know if you're enjoying these type of videos or if I should make more of it. As always, my videos are found in podcast form under the Collect Cash podcast name. And don't forget to buy, stash, and lock Nancy up for insider trading.